Forex. This is Rob Reinhold. I hope everyone had a great Thanksgiving weekend in the U.S. I know our Canadian traders, you joined us a little bit on holiday, and everyone around the world. I hope you had a nice week. Ankit is here, as always, to share with us some of his market outlooks as well. So let's get into what happened last week. We had a couple big things happen this week. We had a very weak Monday, and then Tuesday was weak, and then Wednesday was weak, and then we got Chairman Powell come out on Wednesday, and he basically said, we are going to slow the pace of rate increases. The market loved that, and on Wednesday, the market went up about 4%. Just a huge, huge run. And then on Thursday, we basically hung in there, and Friday, we gapped down, and we actually recovered, not all of it, but a little bit of it. Overall, we had a relatively strong week, and we are at some really key levels here. And we're going to take a look at the stuff like the 200-day moving average, a major downtrend line. We are right at key levels. Now, the biggest thing that happened this week was dollar got crushed. And we've been talking about how the dollar is moving everything. We've talked about how the yields are moving the dollar. And so yields came down, dollar came down, equities liked that kind of action. We also saw rising commodities with the falling dollar. We had gold and silver come out of nowhere and put in really solid weeks. Oil had a good week. So everything was actually pretty good. We are getting relief. All the things that were causing the market pain, we're getting relief, except in cryptos. Cryptos are still shaky. We actually heard from FTX's CEO, SBF, and he spent all day on TV on Thursday basically defending his company and how they didn't do anything wrong. And he just got grilled. It looked really, really bad. And so cryptos are still in the penalty box. They did have an up week, but they are still in the penalty box until we see some more consolidation. Last week on the economic front, we had a lot of information come out. We got CPI out of Australia, much, much lighter than expected. We are hearing from the RBA this week, and there's no doubt that they are going to be looking at the CPI when they make their decision. On Wednesday, we got the JOLTS job openings. Now look, this is a report that no one has ever paid attention to until the last 2 months. Once Chairman Powell says he wanted to see job openings lower, the market has been hyper-focused on this number. And it actually came in a little bit better than expected, which put pressure on the market on Wednesday until later that afternoon. Chairman Powell came out, said, hey, we're seeing enough that we're going to start to slow the pace of rate increases. On Thursday, we got manufacturing in the U.S. that was lower than expected. And we got the PCE price index, which is an inflation number. And it is the inflation number that the Fed says that they watch the closest. As you can see, that was lower than expected. So lots of leading indicators in the U.S. are telling us, hey, inflation's coming down. In Australia, inflation's coming down. And then going into Friday, the first Friday of the month, we get employment reports. And this was the report that the market didn't want. We've been talking for the last 5 or 6 months that right now, good news is bad news and bad news is good news. We got a better than expected jobs report, and the market went down about 2% on the numbers. We did fight our way back a little bit. The buyers were there by the end of the day, but this is not the kind of number the market wanted to see after getting a whole bunch of weak data all week long and then getting Chairman Powell come out and say, hey, we like what we're seeing. That being said, it wasn't that strong of a number. Yes, 263 versus 2,000 is strong. Unemployment was still at 3.7%. So it wasn't like it blew the numbers out of the water. It just was a little bit less. Ankit, what do you think about all the economic news we heard this week?
I mean, so far, I would say if you really kind of tune out these numbers, I mean, it seems like markets have been pretty strong. They're fighting any sort of negative news. So I think if you take a look at it this week, I mean, even today's jobs numbers, I mean, it affected the markets for a little bit, but then we just seeing a little bit of rebound towards the end of the day. So it seems like the numbers are not really what's affecting things. I think right now, everybody's kind of looking at, okay, what's going to happen in the next month? Are we going to have a big breakout? I think that's what people are really focused on. And I mean, we have seen this over and over again this year. the numbers are not as important as what the Fed is saying. When we didn't have any movement this week until Thursday, or when the Fed Chair Powell spoke on Wednesday, sorry, and we had a big move. And I think that's what it is. So I think overall, it's better to just pay attention to the market price action overall rather than the economic numbers, because it seems like markets is just going to do what's going to do. I mean, look at the average hourly earnings today. I mean, 0.6 versus 0.3. I mean, there's certain numbers in there where I would expect the market to kind of close on the lows of the day. That's not the case. So I think it's at this point, you just don't want to fight the markets, but just kind of see, okay, where's the next inflection point? So I think that's what everybody's focusing on.
Yeah, and the market is completely focused on where is the next move of the US Fed. That's literally what's moving this market. And right now, the market is betting that the Fed's going to back off. And the Fed came out and told us they might back off. That is so much more important than these little minutia of these economic reports. So let's take a look at last week. Let's look at the performance. We'll put that week in the books. And then let's really talk about the week ahead. S&P was up slightly. The world index was up stronger. Cryptos had a decent week, but look at the basic materials. Look at the commodities. Gold and oil had very, very strong weeks. Now, I really want to spend some time here on this chart of the S&P 500. And I drew a nice fat red trend line so everybody can see what's going on. Now, we failed back in March. So again, look at these waves. These waves come up and down. Big waves down. We come all the way up to this trend line. We have big waves, and here we are back up to this point. We cannot ignore where we are here. Ankan and I actually spent some time talking about our outlooks on the market. We actually differ on our outlooks of the market. However, it's because we're right here on the edge of the cliff. We either go over the cliff, which means we break out and run, or this cliff ends up being the resistance that it had been the last two times, and this is the end of this wave. Now, Ankan and I, we had this discussion, and I always call these kind of talks cocktail talk, meaning it's best to have these talks with your friends that are traders over some drinks and cocktails, because it doesn't matter. Our talks and our debates, it doesn't matter. What does matter is what actually happens in this market. We are right there. So either one of us could easily be right, and maybe next week one of us will be gloating about it and the other one will be like, okay, I was wrong. But right here, right now, we are on this edge of the cliff here. We are in very, very important territory, and we'll talk about our outlook going forward. Let's check in on cryptos, the performance. Ethereum was the big winner this week. I know I've talked about how Litecoin has been looking the best out of any of them for the past month. It had a decent return, but you can see here, everything is still very muted in crypto. People are not willing to take risk. Remember, crypto is a risk-on asset. And when people are a little scared to take risk, it tends to underperform. We come over here to the Forex world. Wow, these are great moves. This was a fantastic week. Very rarely do you get currencies that move 2% in a week. Again, this is the basket of currencies. This isn't just one pair. This is the yen against all the other currencies, up 2.4%, and the dollar down 1.3%. I talked about this in my Thursday end of day, and I said, look, the dollar yen is so negatively correlated right now. It's the pair to trade. We traded it on the employment report on Friday. A lot of our traders made a really nice trade with me on Friday on dollar yen. Dollar yen is very, very highly negatively correlated in the moment, meaning that this is where the largest moves are happening. Anka, what do you think about dollar yen here? I mean, are you seeing anything that's telling you that this negative correlation is going to change?
I mean, so far, with this is what I see is a bit of an unwinding going on in this massive trade that happened this year. I mean, dollar yen was almost up, I think, 24% at a certain point. The way I look at these markets, that a lot of these movements have been very much in one way. So dollar has been one way, yen has been one way. So when we see a bit of an unwinding happening, I mean, it's not really following, okay, what the Bank of Japan is doing now. I mean, remember, just not too long ago, back in September and October, they intervened twice, again, just to kind of prop up the currency. So right now, this whole story is happening between these two about unwinding of that trade. And we saw that. I mean, we saw a massive move back in July as well, where, saw a massive drop in that pair. So I think at this point, there is that trade that everybody's expecting market to rally and everybody's expecting dollar to fall apart. I think that's the trade that's going on. If any of that changes, I think we can see a bit of a turnaround. I think that's the only thing that will turn around. It's just like a teeter-totter, like, if the dollar goes up, the yen will come down with it. I think that's the trade. That there's a pure negative correlation that's kind of taking place here. So I think until anything kind of changes in the markets, it's in 2 weeks we're going to have the CPI and all the eyes on that. Unless that would be the only catalyst that could change things, but I think otherwise we'll probably see unwinding of that again. I mean, dollar yen is still up about 17% for the year. So, I think at this point, that's the big trade here, and nobody just knows, as we talked about earlier. We just, we're at the edge of the cliff here. Same thing with the markets, and I think the same thing with the dollar as well. And I think we'll find out in 2 weeks, and that will again set the tone for the markets for the rest of the year.
Yeah, I agree. Dollar yen is going to be the big trade here until it stops. I totally agree when you say there's an unwinding of the trade. I think there was a carry trade going on. We haven't seen a carry trade since really 2007 when we saw it with the Aussie and the Kiwi against the yen. I think people have been buying the dollar because the Fed has been so aggressive and selling the yen because the Bank of Japan has been doing nothing to get the interest rates. I think this trade is unwinding, and I think there's more to go. Outside of dollar yen, we've loved the Kiwi. We've been very clear that the Kiwi is looking great. And wow, another great performance, 1.4%. So I know we had some traders in Kiwi pairs this week, so great job. The only other one I want to note is the weakness in the CAD. We've talked about how the CAD and the dollar have been very highly correlated together. We're starting to see more weakness in the CAD than in the dollar, whereas before we were seeing more weakness in the dollar than the CAD. We hear from the Bank of Canada this week, and I think the CAD could potentially either make a reversal or continue to fall lower. We'll take a look at that specifically. So I took a look at the SPX, and we took a look at it on a long-term chart because I really want to talk about where we are long-term. Here we are, the VT, this is the World Index, and now I want to talk a little shorter term. So longer term, we're at this major milestone. And I was looking at this over a year of time, so very long time frames. I want to get in here closer and just talk about where we are. We have gone above the 200-day moving average. I wouldn't call this a clear breakout yet, but we definitely have some support lines here. If we hold this line here on both the SPX and the VT, I think we're going higher. And so my call is that this equity market is going higher over the next couple weeks. Ankit, what do you think about that call?
I mean, I would agree with that. I think based on just the charts, it looks like market wants to break. And I think that's why I know we have that big hurdle and everybody's kind of like waiting on the sideline till the CPI. But I think if you look at just the where we are, I think market wants to rally. And so, yeah, I think at this point, unless, like I said, we are the same juncture we were back in August and same thing back in March. Markets were very strong. Everything was looking great. So that's the one thing I just want everyone to kind of keep in mind is that, we have been in the same structure before. And I think that's really what's the hardest part here is that, we had the exact same thing back in August and we had the exact same thing before. I think inflation is what is going to cause this. So I personally wouldn't really want to put a bet on this until we get the CPI on that Tuesday, the following week. And I think that's really going to set the tone. I personally think that the next easier trade would be after the CPI running it towards the end of the year. But from now until then, you're probably pretty much front running a trade here. And I personally don't know which way, what's the outcome is going to be. So we'll have to kind of wait and see on that.
All right. So Ankit's a little bit saying, hey, wait for the CPI, which is going to be in 9 days. And I think we've got a little bit more upside in the next 9 days. We'll see. We'll see what happens. check in on cryptos. Again, this was the big disaster, FTX. We've come off the bottom. We churned around for a little bit. We did break out of that area, and we're just churning around again. A break out of the 200-day moving average. So look, I have been very, very negative on cryptos for most of this year. There's been a couple times where I said, hey, I'm going to take a shot. After that, really net. If we go above the 200-day moving average, I have to pay attention to that. I have to pay attention and say, okay, well, maybe my outlook is a little bit too pessimistic. Maybe I need to be a little bit more open to cryptos. If the cryptos can break out and hold above the 200-day moving average, I might start looking at them again. Until then, I am on the sidelines in cryptos. Let's talk about next week. So we have 2 central banks this week. We have Australia on Monday. Now, we will be meeting live as a firm to trade that one. So Maverick traders, come join us for that. Looking for a 25% hike. Remember, their CPI just came down quite a bit. I think 25 basis points is pretty much a guarantee. I don't think they're going to do 50 with that week's CPI. We'll have to see what the market thinks about the statements from the RBA. We do have GDP on Tuesday out of Australia, but you can ignore that because the RBA already knows about it. It's already going to be factored in their decision. I think you can ignore that. Wednesday, we've got Bank of Canada, 10 a.m., another quarter point raise. We'll see what happens. Anka, what do you think Bank of Canada is going to do?
I personally think the Bank Canada is likely to just go with that 25 basis point rate hike. I think that's what we got from last month. You know, they went a little bit lower. It's the same path as the RB has done. You know, there was one time when they were supposed to do 50 and they did 25 and they just kind of proceeded with 25. I personally think the Bank of Canada kind of follows the same thing. I mean, if you look at the CPI numbers, the Bank of Canada or the Canada's CPI has been much consistently lower than it has been in the U.S. So I think based on that, there's no need or rush to Bank of Canada raise more than expected. So I think that's really where they are at. I think they're looking for a small one and then kind of close the books on that and then focus on next year.
Yeah, and that could definitely keep the CAD more weak than strong because the CAD has been one of the weaker currencies over the last couple of weeks. And if the Bank of Canada comes out and says, hey, we're looking to wrap it up, that's going to be some negativity for the CAD. On Friday, we got the US PPI. This one's going to be a decent trade. I think you could actually make a trade off this number coming in at 0.2. Again, good news is bad news and bad news is good news. So keep that in mind on the PPI. So to wrap up our outlook, our equity markets, look, right now we're seeing more strength and weakness. We have to admit that. Moving averages are trending higher. We're trading above the 20 and 50-day moving average. We've had a cross of the 20 above the 50. All of that is bullish. But we can't ignore where we are in the longer-term trend of right up against major resistance levels. So I think you want to be bullish, but I don't think you want to be too bullish. I think you want to be saying, hey, look, if I want to be bullish, I'll take a shot, fully understanding that if we don't break out and run, then you really want to go back to cash pretty quickly. We have 2 central bank announcements this week and major economic reports we already discussed. So let's get into looking at each currency individually. Let's take a look at the cryptos first. I'm going to go through these pretty quick because as a group, I don't like the group. Now, we took a look at the crypto basket, and we saw that the crypto basket has actually recovered. However, when we get into the individual cryptos, we see Bitcoin has really gone nowhere. We had the big fall from FTX, and you can see we haven't gone up. Bitcoin has not gone up. It's a good sign that it doesn't want to go up. It wants to actually go lower, but right now, it's got a little reprieve here. So we do not like Bitcoin whatsoever. If you're looking to buy a crypto, it's not Bitcoin. We come over here to Bitcoin Cash, all of a sudden, hey, this looks better. We got the big drop from FTX, and then you can see we were actually able to trade higher. We're trading above averages. Not too much, we're just at averages, but it looks a lot better than Bitcoin looked. If we go over to Ethereum, same thing. This Bitcoin, we had the big fall, and it's shown that it is not ready to go. We're trading up near the higher end of this range, but still got a lot of resistance here. Do not like Ethereum on the long side. And we mentioned, look at Litecoin. Holy cow. We had the debacle. And then Litecoin's like, hey, hold my beer. I want to go higher than we were before everyone lost confidence in cryptos. Litecoin is the one to buy. That being said, look at it lately. We're in a base. Until we break out of 80, there is no reason to be long in Litecoin. Right now, it's just basing. It could be in the space for a couple weeks, couple months. We have no idea. 80 is going to be the point where I'm at least starting to look at, okay, I'll take a look at this one, but not until then. We go over to Forex. Dollar is weak, and dollar has been weak. We played this short on the payrolls report, and it was a very nice trade. It popped up. We said, hey, that's what we wanted. Let's take a short, and it faded. Exactly what we'd like to see. Let's talk about where we are in the pattern. So we had a big fall. We consolidated here for about 2 weeks, and we've broken down. I still like dollar short. The chart, everything in the chart is telling me to stay short dollar. And I really like the fact that we had consolidated for about 2 weeks before this fall, meaning that this leg down could have some good power behind it and some good velocity. So I like dollar short, -2. Look, any rally in dollar, I think should be sold, just like we sold it on Friday. When we met before the payrolls report, I said, look, it's already down a lot. It was already down 1%. And I said, if I could write the script, dollar would pop at least 1%. It popped 2%. And I said, there's our entry point. We got in and it fell apart. It was a very nice trade by the end of it. I think that's what you want to wait for. Bases and rallies in dollar should be sold. That being said, I think because of what I just said about the dollar, just flip it upside down. Dollar and yen are very negatively correlated. If the yen goes down, the dollar goes up. Period. If the yen goes up, the dollar goes down. Period. This is not a different trade. I don't think we have to look at a different chart. It's literally a mirror image of each other. So dollar yen, I think, continues to be a great trading vehicle. And like I said, you want to be short dollar yen off of pops and bases. What do you think about that, Ankit?
Oh yeah, I absolutely agree with that. I think after this consolidation for the past couple of weeks, and we're getting a nice little move here. I think that trade, there's nothing telling us right now that's ready to unwind. Or like I said, like I don't expect any change in the markets until CPI. I think whatever we are seeing, we'll probably just see the continuation of that. We might see some slowdown. We might see some consolidation. I mean, this week has a pretty big week. If you take a look at dollar yen, I think it's down like 3.5%. So after big moves, I mean, we could see some consolidation. I won't be surprised that we kind of consolidate a little bit into the CPI. So maybe that's my outlook here, is maybe a continuation or consolidation. I think we need to be open for both of that.
Totally agree. And as you mentioned, down 3.5% in a week, I am not looking to be short dollar yen on Sunday, Monday, or Tuesday. What I'm hoping for is just like what we talked about before the employment report on Friday. It's too extended to the downside. We need to wait for a pop, or at least a long base to sell into. I'm looking at this pair later in the week and hoping, I would love to see dollar get a bounce on Sunday, Monday, Tuesday. I would love it, because on Wednesday I'd be hunting for an entry point to be short dollar yen. But until then, I agree with you, Ankit. I think you want to be a little cautious early in the week. Now again, dollar yen looks so fantastic, so much action. And then I come over here to this. Ugh. There's no reason to trade Swiss franc. There's just no reason to trade Swiss franc. And then you come over to euro. There's no reason to trade euro. If you have been trading euro, I want you to just look at yourself in the mirror and just say, what am I doing? What am I possibly doing? If you've been making any euro trades for the last week or two, I hope you look in the mirror and say, what am I doing? It is so clear that it's going nowhere. So what it means is you're hoping it goes somewhere. Well, that's a terrible way to trade. Stick with what's actually moving. The euro and the Swiss franc are basically a no trade. However, the pound is a trade. The pound is looking good. I talked about this on Thursday. I like the pound long. And take a look at where we are. We're looking to break out. We could easily break out. So pound is on the top of my list for potential. And look, we're breaking out of a 5-day consolidation here. I'm looking at pound early this week. I like pound Sunday, Monday, Tuesday. This is going to be my number one trade going into next week, early in the week. And then I'll look at dollar yen later in the week. So what are we going to sell against the pound? Let's take a look at CAD. All right. The CAD is looking terrible. That being said, it is overextended. We talk about we have big moves down, and then we have to have consolidation. I think it's a little late to sell the CAD. Anytime you get to -3, just kind of tell yourself, hey, you probably are at the end of the wave. So CAD, I'm not looking to be actively short CAD. We do have the Bank of Canada. If I could write the script for what happens this week, I would love to see Monday, Tuesday, a rise in the CAD. Wednesday, maybe a pop in the CAD. I would love to take a short in CAD after that pop. Until then, it's too extended. Do you think the CAD is tradable here, Ankit, or are you with me, where you got to wait for a little bit of relief off this down move?
That's a good question. And I'm in the same boat as you. And I actually want to highlight that when we look in the charts. But it's whenever we get to the point where we are extremely oversold and overbought, it's always a difficult trade. And I think that's something I will highlight when we look in the charts and we look at the RSI. I mean, we are seeing some really extreme levels. I mean, if I take a look at CAD hasn't been this oversold. I mean, I'm not just talking about a individual currency basis, but like when a basket is so oversold. And if we go back in time, I mean, on a daily chart, we go back in time. I mean, it was been a couple of years since we've been that oversold. And that's just being the story across the board. I mean, if you look at currencies that are moving, we have, I mean, if you take a look at Kiwi is a fantastic currency so far this month. I mean, it's sitting at these overbought levels. And I mean, if we take a look at daily chart and even compare some of the crosses like Aussie Kiwi or even Kiwi CAD, let's just use an example of Kiwi CAD, extremely overbought versus extremely oversold. I mean, we are seeing extreme readings. So whenever that happens, it's always a difficult position to be in because, you know, you don't want to sell, but you don't want to buy. I think that's where I am. I don't want to sell. I don't want to buy. And I don't see any reversals taking place. So usually there's a good short-term trade when there's a reversal. But I mean, right now it's just one way and there's no change. I find it very difficult right now to be, you know, taking it to a trade on something. I mean, just like you did the dollar yen, I think that was a fantastic trade. But there are other currencies that are not budging. I mean, CAD hasn't had a big bounce, and Kiwi hasn't had a big pullback. So I think it's a tough position to be in, and I think maybe next week would be a week where it's not a bad idea if you just to be on the sideline, because I think the next big trade is really going to be off the following week off the CPI. I think until then, that's one of the reasons why I like some consolidations in the next week or so, because we are just so extremely overbought and oversold. So back to you.
Totally agree. And if we take a look at the Kiwi here, I circled or drew boxes around a couple of bases. These were bad times to be in the Kiwi. So if you take a look at the strength of the Kiwi that we've had since October 10th, it's been basically a one-way ride except for two periods, this period and this period. You want to be a buyer outside of these periods. And so, Ankit, you're right. Look, there could be a little bit more momentum to the upside. If someone said, Rob, I want to make a long trade on Sunday, it's the Kiwi. It's the Kiwi. There's no question about it. The Kiwi is the pair to trade on Sunday. If you say, Rob, I want to buy a currency on Sunday and hold it all week, it's not the Kiwi. It's the pound. It's the pound. It looks like it has more upside over a weekly time frame. But what has more upside over a daily or a one-day time frame? It's the Kiwi. It looks really good. But again, we are expecting consolidation. We've spent some energy. We would not be surprised at all if we get a consolidation week. Let's finish off and go back to the Aussie. And look, it just looks like the euro. There's no reason to trade it. There's really no reason to trade it unless you're looking to pair it up against something like the Kiwi. But we'll take a look at those on the charts. So if we take a look at where everything is here, pretty clear. Kiwi yen are the strong ones. Pound is ready to break out. This thing could easily move up to a +2 or +3 early in the week. Dollar CAD are the shorts here. So pretty simple when we take a look at it. So this is our currency board, easily looking at pound, Kiwi, yen for longs, dollar, CAD, and possibly Aussie for short. Let's take a look at pairing those up. So I've talked about how I like dollar yen the best, but I'm not looking at it early in the week. So I'm going to pull up the trade I like early in the week, and that is pound. I think if the pound is looking to break out, what do I want to pair it up against? I could pair it up against the CAD, but the CAD is at extreme levels. So again, I could look at CAD, I could look at dollar, and I actually like dollar a little bit more. I think it's got a little bit more, it's a little bit less at extreme levels. Again, the CAD has fallen for like 10 days in a row. The dollar just broke down out of a low base. So here we are. Here's the daily chart on pound dollar, and you can see we just broke out of a base. So I think there is potentially some energy. Could have another couple days here. Let's see if we can see any longer term resistance here that we might be running into. Boy, no, we've cleared out of a lot of levels here. Yeah, I really like this trade. So the big question is timing. It always comes down to timing. So let's go down to our shorter time frames. Here we've got a 4-hour chart. You can see that we have based for pretty much over the last 24 hours here. For me, 123, 123.05, 123.10. That's where I'm going to put an alert. And I'm very happy going long at that level here on pound dollar. I like that quite a bit early in the week. So that's my trade to look at early in the week. Everything else I'm looking at is later in the week. Okay, what do you want to take a look at?
Hey, well, I don't have a whole lot because, again, if you just take a look at technicals, everything looks rosy and everything looks amazing. But Rob, if you want to just maybe take a look at currency like Aussie Kiwi, I just want to bring it up because, I had questions early this week, and this is a huge disparity right now. And if you want to pull up the RSI on it, I just wanted to show there's some extreme levels that we're dealing with. And if you want to even scroll out a little bit and see where we are, I mean, not a common sighting. I mean, this is where I'd like to use a bit more extreme caution. I mean, especially if you take a look at the pairing, maybe there's a better, maybe next week, maybe it's better for the Aussie than the Kiwi. I mean, that's the one trade I can look at. I mean, I like the fact that, as you said, maybe look at some things that are not so overbought and oversold and maybe play that against maybe the dollar or something. But I mean, take a look at Aussie Kiwi. I mean, this is very oversold. Again, I don't know how long this will stay like that, but I mean, right now we are in this exhaustion phase. And remember, that's the one thing we need to look for whenever you're looking for an end of that move is an exhaustion. And we are getting in the exhaustion. So Aussie was not a currency to trade this week, but it might be a currency to trade next week. So I think that's what you got to focus on. Maybe not so much on the big movers this week, but potentially what can move next week. So that's what I'm looking at, Rob. And I think early in the week, I'll be paying attention to what's moving, and then based on that, we'll make the determination on the pairing. But right now, it's very important to get your pairings right because your whole experience of trade of this whole week. Rob, if you want to just pull up, I just want to give an example of if you want to pull up Kiwi dollar, and let's say if you were holding Kiwi dollar, I mean, look at that move there. But now, if you compare that to the Aussie dollar, and if you look at the Aussie dollar, now you will have an entire different picture there because again, it's not the same looking. It's just lagging there. So that's why it's important to get your pairings correct because, something like Kiwi dollar did really well, but Aussie did not. So, if you're trying to pick things up, and I think we could see something opposite next week. Maybe we'll see a bit of a bounce in the Aussie over the Kiwi, and I think then that will be the right pairing to have. So it's important to do that, important to know the levels, and again, always ask for where you're entering in that stage of that rally or a pullback. Usually what happens is you get impulse move towards the end. You're emotional, you're FOMO, like you don't want to miss out, but that's not the right point to be in. So I think if you want to go long Kiwi, you want to wait for that to come back to really get long again. But I think right now, looking for things that are not so overextended is really the pick of mine that I'm looking at next week.
Well, thanks, Ankit. All right, so let's wrap this up. Equities like it to hold. I think we hold or move a little bit higher, and then that CPI is probably the thing that's going to break us out of the range or push us right back down to where we go back to being bearish. Focus on your pairings. Okay, you definitely hit it hard at the end there. Focus on your pairings. Next week, we are going to be meeting live for the RBA as a firm. So come join us, Mavericks, and we will be looking to set up some live trades for that. We won't be trading live on the Bank of Canada, but we will have our live midweek update that Corey is going to run. Thank you so much. Have a great weekend and be safe. Goodbye, everybody.